Visa is a phenomenal business, but at $339 per share, this is the wrong price. In this video, I'm gonna show you my price prediction for the company and why loving the company and waiting on the stock is not a contradiction. And at the very end, I'm gonna show you the exact trigger that can move Visa from my watch list to my buy list. The digital payments pie keeps compounding. We're talking about 14.5% compounded annual growth as adoption across embedded checkout options, cross-border travel, and other different avenues keep pushing the transaction volume that happens through networks like Visa. And in this market, the company has a significant moat. We're talking about the acceptance of so many different payment options and merchants, reliability, and trust, making the Visa network so popular and so broad that you almost don't see it as you go about your day-to-day life. And yet, it is always there. The company's leadership, well, we're talking about a big bag disciple, Ryan McInerney, who ran the JP Morgan Chase Consumer Banking Division before becoming Visa's CEO. And this is exactly who you want running a company like Visa. The company health is elite. We're talking about amazing margins and a cash machine that is used to fund both innovation, buybacks, and dividends. And altogether, this makes it a great company. But there are two sources that are applying real pressure to the company, and this is regulation and tech. On the regulation side, there's actually two high-profile antitrust lawsuits that the company is dealing with right now. And depending on the outcome, this can have a big impact or a relatively small impact on the company's operations. And on the tech side, there's all kinds of fintech companies and different payment solutions that are trying to take out Visa and MasterCard from getting a percentage of merchant transactions altogether. However, Visa is not standing still. Instead, is looking to apply a whole bunch of different measures to protect against these different pressures. So we're talking about tokenization and fraud defenses that they can offer to different companies, building a network of networks, which is a strategy where they're able to accept all kinds of payment options into one platform that different merchants and customers can use, Visa direct payouts, and push to wallet options. And now what the company is focusing on is developing purchasing agents where you can tell an AI what you're looking to buy, give it all the different criteria to go and look after, and then you can just let the agent go find that for you and then just accept the purchase after. Now, this is where things get interesting with Visa stock. So as you can see, this is my analysis model for the company, and we have projected a revenue growth of around 10. And this is very much in line with the historical growth of the company, analyst expectations, and market projections. At the same time, we have a terminal price to sales ratio of 11, which makes a lot of sense given the company's moat, as well as what some of the other competitors are trading for based on their revenue growth and EPS growth. Altogether, with the discount rate of around 11%, which makes sense with today's interest rates, this gives us a price per share of around $212 per share. And right now, as you can see, if I refresh right here, you will get the latest stock price, which right now is around $340 per share, representing a downside percentage of negative 38%. And by the way, if you want to get this spreadsheet, just comment valuation on the video and my team will share the link with you to download it. It will be absolutely free. The only thing is, if you do want the spreadsheet to populate with automatic data, as you can see from this formula, the stock prices, and a whole bunch of the data that goes in the background, you will need to have a Wisesheets account to be able to power that data into your spreadsheet. So go check it out. This helps us provide more analysis videos for you. Now that we know that we're talking about a great great business that just happens to have a little bit too high of a price right now, let's talk about the three things that can make the price right. Number one is having legal clarity, and this means, for example, once the case with the DOJ reaches a final conclusion, we will know exactly the kind of guardrails and the kind of restrictions and regulations that the company will have to go through, if any. And so then we can more accurately measure the impact on this legal case on the company's future performance. The other thing is, if interest rates drop, which most likely they will, this can obviously support a higher price to sales ratio multiple, which will help to increase the company value. And then lastly, and very critically, if the company is able to build an operating system for agents and all kinds of payments that are driven through AI and intelligent commerce, this can really help to increase the company's transaction volume, because all of a sudden people can be more productive when doing their shopping, which means more shopping, which means more transactions and more revenue for the company. At the end of the day, as much as we can like particular brands and companies, investing is not about this, but rather also about the company's valuation and the price that we're paying today to acquire shares of this particular company. And while the cash flows and the financial performance look great for the company, the price just doesn't right now. But I'd love to know what your thoughts are in the comments below. Let me know what you're doing about Visa stock, and I'll see you in the next one.